Devansh Jain, who is joining us from the management side. Devansh, good to have you on the show. Long time. A lot of good news is happening, a lot of news flow around the company. Let's start with the most recent one, which is the 200 megawatt order, which you have bagged for the 3 megawatt wind turbine gears. This, how important is it? Talk to us about and where does this order take your overall order book as well?
Hi Ajay, good afternoon. Good to be back after a while. So this 200, every order is important, whether it's a big order or a small order. Every order is equally important. Having said that, I think the current 200 megawatt order book is again a CNI order and takes our order book to about 2.9 gigawatts, not factoring in what we've executed in Q1. But I mean, if you look at it from an order win perspective, over the past couple of months, over the past 12 months, we've built one of the largest order books in the sector. And we continue to see very large orders coming in across IPP, C&Is, and PSU players. I can't provide exact numbers and names at this point in time, naturally, but you will continuously see a lot of order inflows. And I think it's akin to what we've been saying over the past 12 months, that we've readied ourselves for the huge growth which was coming in the sector. Happy to talk more about that, but that's where we are.
Taking a leaf out of your answer, Devansh, this morning earlier in the show, Sridhar was sitting on my show from Inam, and one of the spaces he spoke to us about is how wind energy and renewables overall, and wind in particular, is going to add massive capacity additions next 3-4 years. What I understand is that yours is a company which is likely to be at the forefront of that massive expansion, is likely to be a beneficiary. Talk to us about that, which lies ahead in terms of size of the opportunity. And then I come to execution at your company. How is execution progressing to capture that in your numbers?
Look, I think in terms of size of the opportunity, clearly we're gunning for about 500 gigawatts of renewables, whether it's 2030 or 2032. And currently we're at about 200 odd gigawatts. The opportunity is just mind-boggling. I mean, depending on which number you want to pick up, but broadly, anywhere from 8 to 15 gigawatts is what the annual wind installations are expected to be. I mean, that's a requirement from the government. Naturally, we are moving towards 4 gigawatt, then 6 gigawatt, then 8, then 10, and so on and so forth. There's a huge shortage of power. Power demand is growing in an unabated manner. I mean, I don't want to give specific numbers, but northern region power grew by 22% and so on and so forth. So you're going to see a massive thrust. What's happened within this pie now is, on the wind side particularly, you're left with very few players. Or even if new players were to come in, which is more than welcome, these are not, no offense to mobile phones or televisions. These are very high-end complex products. You need to have the ability to stand for the next 20, 25 years in terms of O&M capability, in terms of developing projects, building projects. And I think to that extent, there are very few credible players. And I think that's what's really playing out across the wind sector. Whether it's Sridhar or whether it's a lot of people in the sector, I think people are now moving more and more to the realization that, yes, this is not just some froth, or this was not some hawa mein baat chal rahi hai. You're actually seeing a lot of execution happening on the ground. The government being very, very clear with respect to walking the talk in terms of order flow, in terms of intent, in terms of doing the right things for the sector. And I think to that extent, I think Inox Wind is in a very, very sweet spot to create massive value as we move forward. To your question on execution, look, I think execution is progressing very well. We are continuously ramping up every quarter. Every quarter is continuously going to become bigger and bigger. Naturally, in the silent period, I won't be able to spare specifics, but we have been able to transition to our 3.3 megawatt turbines faster than our own expectations. And, virtually 90-95% of this year's supplies are all our 3 megawatt product. I'm not going to change guidances at this point in time. However, given the huge order inflow pipeline which we continue to have and which we continue to announce, I think there is a strong upside risk in the next financial year and so on and so forth, clearly, as we move forward.
Value, Devansh, we just saw a transaction happen at your end. Promoters sold off some stake and then plowed back the money raised into, in order to reduce the debt. Can you tell us a little more about that transaction, which was keenly watched by the market men? All right, there was a bit of a technical issue. We'll get back. Right, Devansh, I just wanted to get back on that transaction which we had seen in the manner of block deal, and then that we came out, promoters had sold stake, and that money coming back in order to reduce the debt. Talk to us a little more about it.
Look, first and foremost, Ajay, it was the holding company,
Sure.
Inox Wind Energy Limited, which sold stake and plowed it back. So it's not as if the promoter sold stake and took the money home. It
Not
was
the
a
idea.
very, very important step for us to become a net debt-free company.
Yes.
And that's a milestone which we've been working on very hard for the past 2 years. This was the final step to make Inox Wind a net debt-free company. And I'm very happy to say that we finally achieved that. This started about 2 years ago with the promoters actually putting in their own money, not IWEL, but the promoters of Inox Wind putting in their own money into the company, which was very sizable, it was about 600-700 crores. When people did not have faith in the sector, people did not have faith in Inox Wind. And from then, over the past 2 years, we worked our way through to make this a net debt-free company. Naturally, today, the opportunity that lies ahead of us is massive. And we have all the levers in place, be it now a very strong balance sheet, a large order book, the massive inflow visibility in pipelines. We've launched new technologies, our 3X supplies, our 4X platform, which is being developed. We've scaled up, we've built a very strong management team. And needless to say, I think the massive common infrastructure, which is a very strong moat for us, which we carry on with, I think we are very strongly positioned now at Inox Wind.
Just to clarify, what I meant was not the promoter and the management, but the promoter company actually did the block and then, of course, reduced the debt on the books. I want to understand what kind of savings on debt are going to accrue in the company going forward, and just leave us with some thoughts on how things are looking for next few quarters. I won't go in details, you're in silent period, but just a broad color.
So, FY24, our finance costs in the company, all banking finance charges about 250 crores. Obviously, Q1 has been some costs, etc. Going forward, it's net debt free. Having said that, I think the savings should be broadly 175 to 200 crores vis-a-vis last year's numbers. And I think going forward, I think we should completely eliminate banking costs. Yes, the only thing we need are LCBG, which are minuscule charges. But given our continuous upgrades and performance, I think those costs should come down also. And just on the parting side, I think we are working on several areas across the entire ecosystem, across the entire value chain to unlock, very, very significant value. Given the size at which we are operating and the massive growth which is upcoming, I think there is huge value creation potential. Leveraging the synergies across just all the wind companies and the renewable companies being built in the group. And this, along with the macro tailwinds, I think positions us very, very strongly, to talk. So while I may not be able to throw more light, but I think the aim is to make the renewable arm, which includes listed, unlisted companies across the InoxGfl Group, a $10 billion arm in the next couple of years.
Thanks very much for your time. Good luck. We'll track your story very closely here on ET Now. With that,
if you like this video, then like, share and subscribe to ET Now.